Hey traders, Akil Stokes here of TradingPower.com, and thank you for joining me once again for this week's live room weekend review. Now this week I don't have any live recorded sessions from our trading room. I actually don't even have any recap videos from after our trading room. Reason being, well, other than me just being lazy, I've actually been pretty busy getting things together for next week's live training event. And speaking of that, that's kind of what today's video is going to piggyback off of. Now, if you've registered already and you've probably gotten the free, or not, you've got the free content as far as some articles, the pattern reference guide, and the trading videos. Well, one of the trading videos was titled "The Power of Prediction," and this week in our syndicate, we got a great example of how professional traders make predictions, always stay one step ahead of the market, and well, it can pay off really big. So we're going to start off this week's review checking out the trade of the week. I'm going to come back in, talk about how it progressed, and then I'm going to end it off showing you some syndicate videos, or some videos that I did for the syndicate a few days ago that have patterns that can actually complete as the market opens for the next week. So hope you guys enjoy, and I'll see you in a couple minutes. We also have something else forming. Now, if we go down, if we zoom in a little bit, I'm gonna dull this up. Let's make this one. We actually have another potential pattern forming as well, depending on how the market moves. We know we had a 618 retracement with our C leg. Well, if we do this, switch things around a little bit, go X down here, make this our A, make this our B. We're setting up a potential C leg for a bullish Gartley pattern looking like this. X to A to B, B to C if this completes, looking at C to D completion down here. Now I'm not too worried about the completion yet, but if you're an aggressive C trader, well, the market is right at, or really getting close to, a level where you can start looking at an aggressive C trade. And remember, aggressive C trade is where we're looking to get into the market in advance of a pattern completing. So you're saying I have a potential Gartley here. We've got all the requirements, 618. We've hit the 618 in between the 786. I'm expecting that this smaller pattern is going to complete. Is there a way I can hop on board a little earlier? And I'm not really big on taking aggressive C patterns, but if we get a case like this, it may be worth your time. And again, if I bring my red line down here to our 786 and we zoom out, not only do we have structure right here, which means we can place stops a little bit above that and be safe, because, well, we know if our A leg is penetrated, our pattern is invalid. If our pattern is invalid, then there's no reason to be in this aggressive C trade. So we can get a risk reward looking something like this. But also, again, zooming out left, what do we have? Bang, look at that. Another major previous structure level. And we got some more in here too, some choppiness. But this level right here, another major previous structure level. So it may not be a bad opportunity for you to hop on an aggressive C trade for this pattern. Again, if it's in your trading plan. If it's not, then you should just ignore the whole second part of this video. Now, as far as stops and targets, talked about that already. Stops for my aggressive C's are going to be right above our A leg. So again, you could take one ATR, you can do a set pip amount, whatever's in your plan. Targets, I look for a retest of our B leg for target 1, and then I look for a completion of our Gartley pattern for target 2. So wherever the Gartley completes down here, whether it's the 786 127, let's just say our Gartley completion is going to be down here at 102.44. Well, I look for my second targets down there and look to do a stop and reverse trade. So I take off my remaining position going bearish and hop in the opposite direction going bullish. So we left off the video talking about a potential aggressive C trade on Aussie dollar. And now I want to show you how this trade actually progressed. I'm going to click through one bar at a time. And you see the market came up right on this candle hitting our 786. So as soon as it hits our 786, we're thinking aggressive C entry. Either you can enter at market if you're a real aggressive trader, or you can look for an entry technique such as a double top or a lower low, lower close, moving average cross, whatever you want to put in there. But as we walk through, we see the market continues to trend up, which isn't a bad thing because remember, our stops are right above these structure highs. So the closer we push to our stops, the less risk and the more reward we have on this trade. And so we get up here, you can see the market goes oversold or overbought on this candle. We retrace, and then what do? We come up into a perfectly symmetrical double top. And I say symmetrical because look at this. We have our high bar, 1, 2, 3, 4, 4 bars down until we get to our low, 5, and then on our way back up, 1, 2, 3, 4, and our fifth bar is a double top. Looking down our RSI divergence as well. Again, market going overbought on our first test. We're getting an equal high, but getting a lower high on our RSI. That's called bearish divergence. Perfect opportunity to enter right here at 103.64. And then, well, you can see what happened after that. Market rolled over, came down, hit target 1, down at our B leg for about, what do we say, 103.64, 102.80. So about, I'll add the math later. We came down to hit target 1. And then, what we were looking for, well, once again, let's bring our 786 in, or bring our Fibonacci retracement in. X leg to A leg. We're looking at our 786 or our 886. Bring our Fibonacci retracement in, extension in. Swing high to swing low. And back up. And we're looking for this area around 102.48, 102.44 for our stop and reverse to trade the once aggressive C, trade it back up as a Gartley pattern. So we came down, hit target 1 at a retest of the B leg. We continue down. We take target 2s off, let's say 102.44. Stop and reverse, and now we're in the Gartley pattern long. And you can see, well, market comes down, goes oversold once again, comes back down, actually retests it. Channels off for a while, giving us some pain, but because we have smart stops that are under X, we're safe. And then boom, market shoots up, giving us a target 1 and a target 2 winner on our Gartley pattern as well. So again, a simple prediction a few days before, and we knew exactly what we're going to do if the market gave us the opportunity. We had our aggressive C. We knew exactly where we were going to take target 1s at. We knew exactly where we were going to take target 2s at. We also knew that if we got target 2s hit, that would trigger us in a different pattern, giving us a chance to get long the opposite way. And you can see both trades, 2 target winners, bada boom, bada bing, traded a week. But it's all because of the power of prediction. We're one step ahead of the market. We're in the Marcus OODA loop, as Jason would say. We already know what the market wants to do before it does it. And if you can do that, you just have to sit back and let price action take its course. If we take our impulse leg right here, if we're looking X to A, same impulse leg as we have for that bat, X to A, you'll see that price action comes down also to the 786, putting me on alert for a butterfly pattern. So we get 786 there. We also get a retracement to at least the 382 with this spike right here, setting us up for a butterfly pattern. Now, here's how I like to trade my butterfly patterns. I like to look at it more of a Fibonacci confluence type trade because I'm not too big of a fan of where they complete. But this one's actually not too bad because of the structure we have. So, again, let's just draw it out briefly. We're looking at X to A to B down here into our 786, B to C up into the spike right here, and looking for a CD completion. It's going to be somewhere down in this area, and you'll see later we actually have a zone, a potential reversal zone, as Carney would say. So we're looking at, here's how I like to predict my zone. First, I take my Fibonacci extension tool, and I go from swing high to swing low, so from our A to our B leg, and right back up. And I'm looking for this 1618 extension. So right here at 131.26. I then take my same Fibonacci extension tool and I'll do a Fibonacci inversion, so a backwards move from my A leg back to my X leg, and I'll look for this 127 extension to line up right with my 1618. And you see in this case, boom, right on top of it. And we're on a 4-hour chart, so 10 pips is basically right on top of it. So right now I have a level I'm watching. 131.37, 131.36. I can also do this. And there's different way to trade butterfly patterns. But I can take an ABCD pattern again. If I go AB, look for the BC retracement, and then predict and project my CD leg, which is going to put us right down a little higher again. So right now we're looking at a zone, depending on how you trade this, between 131.55 and about 131.26. Now, as always, I want to scroll up my charts, crunch them up, and look left. And what do we have? Well, we've got structure right here. We've got another area of structure right here. And we have 2 levels back here. Also inside here, again, just like a euro dollar, another butterfly pattern. So we're going again, X to A, taking the smaller leg inside. If you're on an hourly chart, it's going to look a little clearer for you, but X to A to B down here, which is now a 786 of the smaller move. Boom, you can see hitting right there in the 786. Looking for our B to C, and we know our CD completion for the butterfly is going to complete below X, so also probably somewhere down in this area. So let's take our fibs, draw them in. Let's take a Fibonacci extension. Once again, swing high to swing low and back up. Looking for that 1618, which is down here at 139.55. And let's take a Fibonacci inversion. So Fibonacci extension, drawing it backwards from our A leg back to our X leg. Swing high to swing low. Back up, and let's see where that 127 comes at. And our 127 is going to come in right at this 886. So again, if you're looking for the butterfly, you have sort of a zone here between 140.26 and 139.55. Let's take a look at this lastly on our DSR chart to see if we can get a visual indication of if there's any structure there. Again, we're looking at what, 140.25s to 139.55s. And you see getting both patterns again right in this major and minor DSR level. So you want to make sure you have stops below 139.28. So once again, thank you for joining me for this week's Live Room Week in Review. If you've been with me every week, well, I appreciate the support. If this is your first time, well, here's what I want you to do. Go to our website, TradingPower.com. If you go over on this right-hand side, again, click over here. Click this handsome fellow's face or the words next to him, and click in here to sign up. This way, whenever I put out either a live room review every week or just maybe a random trading video throughout the week, it's going to come straight to your email. So you'll get a notification that says, hey, Akil has posted a video titled blah, blah, blah. Aside from that, if you haven't already, make sure you sign up for this Technical Trader Workshop. This is going to be big. Again, it's a week-long trading event, live trading event hosted by Jason and myself. We're going to go over a lot of information, so make sure you bring a pen and pencil, or a pen and paper. We're going to go over why you need to be rich, advanced structure analysis, fibs, live trading, trading psychology over here on day 4. This is going to be big, and then teach you about the cipher pattern on day 5. So if you got the email, click the link, register, and I'll see you Monday. If not, and you're seriously interested about coming, again, I only want serious traders here. That's why we did it by invitation. But if for some reason you did not get a link, shoot me an email at akil@tradingpower.com. If you can do that by this weekend, so by Saturday night or Sunday morning, early Sunday morning, if you can get that to me, I'll go ahead and forward that to our support staff so they can get you an email and get you registered for this event. So thank you. I'll see you next week, traders. And as always, remember, plan your trade. Trade your plan. Take care.